What a week it's been in crypto markets. Shocking, depressing, anger-inducing at times. And yeah, a lot to digest. But the key conclusion here for me is that I expect, and I guess hope, that this is going to be crypto's Rubicon moment, taking us back to the key principles of decentralization, censorship resistance, immutability, and verifiability that make protocols like Bitcoin and Ethereum valuable and resistant during times like these. Here are my 5 key learnings from this whole episode. FTX's shocking unravelling clearly shows that deception and fraud are alive and well in markets today. But it doesn't say much about crypto technology. It says a lot more about human nature. Second, fractional reserve banking is the proverbial drug of finance, and it enables frauds to become banking crises, which is exactly what has transpired with FTX as well as other institutions like Celsius earlier in 2022. Many are going to call for severe regulation on the back of FTX, and I understand why. But the truth is that banking regulation is potentially difficult and ineffective in crypto. Fourth, central banking prevents banking crises in traditional financial markets. It's impossible to execute that in crypto markets, and it also might be undesirable. And then fifth, that the primary principles of crypto, they are here to solve this FTX debacle and many others in finance today. So Sam Bankman-Fried, otherwise known as SBF, became well known for his success in his trading firm called Alameda Research, and he went on from that to launch a crypto exchange called FTX in 2019. And FTX grew to become one of the largest global crypto exchanges, and it was largely trusted by many institutional crypto firms, and that trust was engineered because of FTX's marketing campaigns and its strong relationship, particularly that Sam Bankman-Fried had with regulators and politicians, which involved himself giving donations to many politicians. Now, Alameda and FTX should have been separate entities, but it turns out that FTX was effectively using client funds to bail out Alameda Research during the Luna, Three Arrows Capital, Celsius unraveling that we saw earlier this year in May and June 2022. So there's a lot of gory details about this episode, this insolvency, but effectively Sam Bankman-Fried has lied to venture capital investors, he's lied to regulators, and he's lied to his own clients. He's committed serious fraud and misappropriated client funds, and we can expect a lengthy bankruptcy proceeding between FTX, Alameda, VC investors, and deposit holders over the coming months, quarters, potentially even years. And the sudden fall from grace of SBF is probably going to rival Enron in the financial history books. Books and movies will probably be made about this episode because it is really an incredible story of deception. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals. This situation is unprecedented. So this event clearly shakes and rattles the crypto industry, creating contagion into other centralized intermediaries and all sorts of risks. But it's critical to note here that fraud and banking crises are part of human nature and have very little to do with the underlying crypto protocols and the principles that govern those protocols. Bitcoin, Ethereum, and other decentralized protocols continue to run smoothly, servicing customers, many people around the world. Anybody who self-custodies their funds or utilizes reputable exchanges can still continue to transact seamlessly despite the price volatility that they're obviously experiencing. So in the following video, I'm going to outline the key reason for the magnitude of FTX's failure, or certainly a key technical reason, and that's what we call fractional reserve banking. I'll see you in the next video.